the first screen says inventory and product cost, but then the second screen should now have transitioned to where it says inventory account balance. Okay, must balance, I mean. So inventory is the new concept for chapter 6, and it is an asset account. It is on your balance sheet. It's a permanent account. So those are some good descriptors for you to remember about it. I'll say those again. It's an asset account, permanent account, shows up on the balance sheet, and it has a normal debit balance. So all of those things are important to remember about it. Now, the next thing, I don't have a lot of markers because I'm not in my classroom, but I do have a few here. I don't know if you can see me in the tiny screen, but I have 4 markers, right? It's just like your inventory account is very similar to your supplies account. So that's what this first slide here says. If you had 1 marker, so I have this 1 red marker, let's say that's my beginning inventory, just like the slide shows 20,000. So I had 1 marker. I purchased 3 more markers, right? So in the middle, it says I have 4 available. In the middle there, total inventory available. Just like your supplies, at the end of the month, quarter, or year, these 4 all have to go somewhere. They have to be either in your remaining inventory or they have to be sold. So at the end, if I know that I have sold, let's say I sold 3, right? Those are all gone. The ending inventory has to balance to 1. That's what this first slide says, that whatever you started with, your beginning inventory, and any new purchases you make for the month, quarter, or year, those at the bottom here, how the arrows are going down, all of that inventory has to end up in one of 2 places. It has to still be left on your balance sheet, or it has to be expensed. It has to be sold. So remember, whenever you used supplies, you debited supplies expense. When you used rent, you debited rent expense. When you used your equipment, you debited depreciation expense. So this time, when you sell your inventory, you are going to debit cost of goods sold. That's what the next slide talks about, is the characteristics of your cost of goods sold account. So it says, when you sell your inventory, it means your inventory has been used. So mainly in the class, we have only covered service businesses, businesses that provided some kind of work for a client. Maybe they did landscaping, or maybe they painted a house or whatever. But in this chapter, you are transitioning to companies that sell some kind of product. You can think of plenty of retailers such as Walmart or Target or Bass Pro. Those are the types of businesses we're talking about now, that they buy a product and then they sell it to a consumer. So when you sell your inventory, you are going to have to debit cost of goods sold, which again, here's some good descriptors about it. You know, a good multiple choice question would ask you one of these 3 things, or, you know, it would have one of them as a correct answer to describe cost of goods sold. It's an income statement account. It's a temporary account. You will close it out with all your other expense accounts at the end of the month, quarter, or year. So you're going to debit cost of goods sold, and you would credit inventory when you sell the inventory. So I'm going to, let's see if I can do it from here. I don't think I can. No, I'm going to go back. Remember I said I was going to poll you. I'm going to stop this share and go back to our Zoom and ask you a poll question. You ready? What type of account is cost of goods sold? I set it up as an anonymous. So even if you don't know the answer from what I just covered, take a guess. And I've only done this one other time. So once you click your selection, can you see everyone else's or no? I don't think you can. Okay, Gracie is saying no. Or Grace it was. So I've got 7 of you that have voted. I'm going to give you a couple more seconds. 8 of you. I'm going to stop our poll in. It's like the clicker quiz, right? I'm like, click it, click it. I think everybody who wants to vote is in. So I'm going to end our poll. You ready? Here's your results. 67% of you are correct. Cost of goods sold is an expense account. Here's a hint. Let me close this and stop the share result. And we'll do that other poll in a second. Cost is a synonym for expense. Cost is a synonym for expense. Make a little note for yourself that what it really says, remember, if cost is a synonym for expense, it is the expensing of the goods. Goods is a synonym for inventory when you've actually sold it, when you've used it, right? So the answer is in the title of that account to what type of account it is. Cost is a synonym for expense that I record when I have sold my inventory, goods sold, right? Okay, so back to our little PowerPoint real quick. And let's see, I'm gonna have to go. This is the next slide we were here. Can you see this? When you sell your inventory, it is used? Yes. And then the next slide says, when you sell your inventory because you've used it, that's essentially what's happened. It served its purpose. It is there in order for you to make a profit, right? You're actually gonna have two journal entries. You're gonna have one journal entry that shows here on the left of the PowerPoint screen that says we debit either accounts receivable or cash, depending upon if the customer pays us right then or if they put it on account. And you're in credit revenue because that's what you charge your customer. This journal entry here on the left, where I debit accounts receivables or cash and credit revenue, is going to be for the larger amount that they give you in the problem. That's if I'm selling markers, right? And it cost me $1 to buy each of these markers. So I've spent $4 on this product. I'm not going to sell it to my customer for $1, right? That's stupid. I make no money off that transaction. I probably just lose money because I spent my time, buying the product and trying to sell it to you, the customer. So this first journal entry has to be for the larger amount of the price that you are charging your customer, not what you paid for the product. So if I'm charging my customers $3 a piece on these markers, I would have $3 of revenue and $3 in accounts receivables or cash. And then I would also at the exact same time have to do another journal entry to debit cost of goods sold and credit inventory, but this should be for the lower amount. If I paid $1 for these markers, I would debit cost of goods sold for $1 when I sold one, and I would credit inventory for $1, the price I actually paid for the product. So then it looks like I have a profit of $2, right? Sold it to my customer for $3, I only paid $1 for it. So every time it says you sell your inventory, you're going to have two journal entries on the homework. Okay, next slide. It will show on the income statement, and it kind of cut it off, but it showed me the important parts now. This subtotal at the top called gross profit. That is an important thing to note for the entire chapter. And moving forward, it's not just revenue minus expenses on your income statement anymore. It is revenue minus cost of goods sold at the top there. And I have a little subtotal. It shows on this slide of 9,440. It's just, did I charge my customers more than what it cost me, that's cost of goods sold, to purchase this product? And what is essentially the markup on it? It's also known as a gross margin sometimes. And then I will subtract any other expenses. So you can see they have some general and administrative expenses on this that are in parentheses as the advertising, salaries, rent. Then you would have your operating income. Now the bottom latter part there where it talks about investment and interest, I don't test you over that. I think you have a homework question that brings that up. So I would refer back to either this picture in your textbook, or you can come to this, I'll post this PowerPoint. So, and then the next slide before we go back to our polling says, what do we do with shipping? So in this chapter, it gets a little confusing because you are the buyer and the seller. You first buy the inventory and then you sell the inventory. So when you purchase your inventory and you have to pay shipping to get it into you, it will be denoted in the problem sometimes as freight in. So shipping cost would be recorded as part of the asset if I paid it to get the product into me, if I purchased the inventory. It's a little hint there because it says freight in, which IN is the beginning of the word inventory, right? So when I have to pay shipping in to bring my product into my warehouse, I would debit inventory. If I am shipping it out to my customer or my client, they have purchased it from me, I would debit shipping expense. So the shipping cost is not always recorded as part of the asset. It's only when I'm purchasing my inventory and the inventory is coming into my warehouse. So I purchase the inventory, I would debit inventory. I sell the inventory and I have to do anything with shipping, I would debit shipping expense. Okay, let's go back. When you purchase your inventory and then you sell some of it, it always has to balance. There was a slide at the beginning that said all of your inventory has to end up in one of two places. So think about supplies. How did we make supplies balance? Remember that at all? You ready? Okay. So this really should say beginning inventory plus purchases minus ending inventory. Can you see the results? So only 2 of you got that right, but that's okay. The used inventory is represented by your cost of goods sold. So in this formula that you're looking at on the poll, the word cost, the phrase cost of goods sold is actually the synonym for the used inventory. So if you take your beginning inventory, you add your purchases, and you subtract the ending, that difference would really tell me what got used or sold, right? So think about, again, supplies. Beginning plus purchases. This should have said minus ending. Let's do the next question, because when you purchase inventory and you have to pay the freight in charges, how is the shipping cost recorded? I'll give you 5 more seconds if you want to make your selections. Okay. So this one looks better. Attendees are now viewing the poll results. Debit to inventory is correct. If you have to pay freight in or any shipping costs to get the product to you, you would debit inventory. The concept behind that is that we want to record the true cost of our inventory. And so whatever we paid for the inventory, actually, you covered this concept in chapter 7. I don't know if you remember it or not. I'm going to stop my poll and go back to our slides. Whenever we paid for shipping on our big product, remember that we had in class a centrifuge was one of them. Or on your homework, you had, I think, a pizza oven. I gave that demonstration or talked about that example. Any cost you pay to get the product to you is added to the value of the inventory. Any cost you paid to get the equipment to you was added to the value of the equipment. So that is why we do that with the shipping. It's any cost we incurred to get the asset to us added to the value of the inventory, and we want to know its true cost. So let's finish up the slides real quick, and then we'll have the one more polling question. And we were right here. So inventory costing systems. We have 3 that we're going to cover. Can you see these FIFO, LIFO weighted average things? Okay, so those things I'm going to give you some demonstrations on in a minute, but what it says is when I buy my product, I have to have a way to account for all of that product coming in to my warehouse. I can use either specific identification, which isn't listed on this slide because it's too easy and you don't get tested over it. Or you can use FIFO, LIFO, or weighted average. FIFO stands for first in, first out. And it's not talking about the actual physical product. It is talking about the cost of your product. So what is key in this chapter is the dates and the cost value on each of those those quantities that you purchase. So if I have these 4 markers here, right, and I purchase, this is a purple. It kind of looks blue on the screen, but it's a purple. If I purchase the purple one first and it costs me $1, and I purchase the black one second and it costs me $2, but then let's say Mickey comes in and he buys this black marker, I don't really care which marker he bought. If I was using FIFO, I would take the cost of the purple one, the $1, and that is what would get sent to my cost of goods sold. The first cost in is the first cost out. It's not about your physical product, okay? LIFO works the opposite way in that it would take the last cost in is the first cost out. LIFO, last in, first out. Now, the reason I put on the slide that technology companies will use that is because their most recent cost, their last cost, matches up better with the price that they're selling inventory out initially. What I mean by that is when you think about iPhone 775 or whatever, right? When it first comes out, it's very expensive. So their revenue is extremely high when it first comes out, when it's first being sold on the market. Well, when were its cost relatively high? Well, when they were first creating it, right? So to match up those high costs of creating the product with their high revenue, they will use their last cost that they've had, their most recent cost, right? But a lot of companies will use FIFO because it matches better to their physical product. Think about when you go to the store and you purchase milk, right? It's coming out, that the first one in that they put in there is the first one that's coming out usually, unless people reach in and purchase a different one. So FIFO often does match the physical flow, but accounting wise, it's really just about the cost of the product. And then weighted average is simply an average, except you have to use the totals. Total. You care about TAL? I care about TAL, right? That's all about me in this class. So you have to use the totals. Total cost divided by total units. And I'll show you an example of that one. Okay, so then the last concept before, we'll do one more poll before I show you my examples. I don't know if you're going to get this. This question's kind of confusing. What does first in, first out mean? Okay, so that was really good. That was excellent. All of you that participated got that correct. It is about the cost. It's not about the physical flow of the goods, and that's what I'm going to demonstrate in a second. But it's about the cost. So when you're doing your homework, you're going to look at dates and quantities, and that's going to help you find the answer, because it's not going to tell you on the homework which physical product was purchased. It doesn't matter, and it doesn't have anything to do with revenue, and we're not dealing with shipping on these cost systems. So let's go back and finish up the slides real quick. Excellent work on that one. I'm very proud of you. So then the last part of the chapter, and this has been a quick run through for an entire chapter, says there's one more concept that you'll have to learn, and it's called lower of cost or net realizable value, which means market value. So you have kind of encountered this before, and you've all actually encountered it in real life. You purchase something, the cost, that's the first line there, for like $5. Let's say you purchase, I don't know, a plant. That's not a good example, Tal. Anyways, going on. Later, whatever you've purchased, the value in the market after time may have increased or decreased, right? If you purchase a bike and you use it a lot, but it's a really expensive bike, maybe it actually increased in value because they stopped producing that model and people really love that bike. So if the market value goes up, you don't do anything with that. what will happen is if you end up selling that bike to someone, you would have a gain on it, right? You would sell it for more than what you thought it was worth or what you had paid for it. But if the market value goes down, hence this word right here, lower, if the market value goes down, you do have to make an adjustment for that. So I have another slide here. Oops, it went too far. Oh, back. Let's try it again. That gives us an example of some different products. And I don't know if you've encountered these products or not. Can you see this, Ninja Turtles? Can you see that slide? Yeah, okay. So if you were one of those people that went around to garage sales and you bought a bunch of old toys and then you tried to sell them on eBay or whatever, Facebook Marketplace, let's say this left-hand side of the slide, Ninja Turtles, you purchased 10 of them for $3 each. You got a bunch of Beanie Babies. Remember when people used to put those in their car window? Not a good idea. Don't do that. And you bought some Barbies and some Furbies. Did you have some Furbies, maybe? I never did. They were not cool when I was a kid. So this column over here, your product cost, that's what you have initially paid for all of those items. Well, after time has passed, you find out that those Ninja Turtles are now each worth $8. So here's where I need someone to give me an answer. Do you think we need to make an adjustment on the Ninja Turtles? Yes or no?
I would say yes.
Okay. Anybody else say yes? Anybody say no? I'm going to say no. Okay. Here's why. We're going with the lower of the two, right? So when I compare $3 to $8, $3 is lower than 8, right? It's already on my accounting records. When I purchase it, what do I record it for? For its cost, right? So it's already on my accounting records for $3. That is the lower of the two items. Ready for the next one? Beanie Babies. You paid $2 a piece. They're now each worth $1. So do we need to make an adjustment? Yes or no? Yes, I got a yes on that one. That is correct. Since the market value decreased, I got to go with it's lower now, right? So it's already on my books at $2 a piece. I will have to make an adjustment on the Beanie Babies. Well, put a pin in that for a second. Remember that one. We're going to adjust the Beanie Babies. How about the Barbies? Do we need to adjust those? Yes or no?
No.
No, we don't. Because when the value increased to $500, which I actually had a Barbie that did, that happened to me. I sold that sucker my first year of marriage because we were dirt poor. So, thank you, Grandma. All right. When the value goes up, it's only worth $500 if somebody's willing to pay me that much, right? You can think your stuff or the market might tell you it's worth more, but it's only really truly worth that unless if you sell it, right? So that's when we would show an increase in value. So we're only looking for ones that have a decrease. All right, and then the last one, the Furbies, do we have to adjust it?
Yes.
Yes, we do, because it was 15, but now the market says it's only worth 10. So how do we make that adjustment is what the last slide will tell you. It will say you do a total on these items. So the Beanie Babies, there were 100 of them, and each of them lost $1 in value. So that would be a $100 adjustment on the Beanie Babies. You see it, 2 minus 1 is $1 times 100. Then on the Furbies, there are 30 of them, and they have each lost $5 of value. So it'd be 30 times 5. So you have a $150 adjustment on that. So really your journal entry would say I debit cost of goods sold for $250 and I credit inventory. I decrease the value in the inventory account when I have to adjust for the lower market value. What questions you have about that? Nothing? Okay, I'm gonna go back to, you have to look at my face now. Oh, no. Not her face. Oh, I've lost some more. I see where they are. Okay, quick little recap, and then we'll do some number things. So any idea what this might be a visual aid of? Any idea? It's one of the costing systems. Oh, that's.
FIFO.
What'd you say, Autumn?
FIFO.
She is correct. She said FIFO. Let me just show you why she's correct. Maybe if I can get it in. So if I put this can in, does it look backwards to you? Does it say $2? No, it doesn't say $2. Yes, it does. Okay. $2. I put it in. It doesn't look backwards, is what Grace was saying. I put it in the back. It's going to be the first one, right? I put this one in. $6. It would come in second. And then this one says 4. It would be third in there. But remember, FIFO says it's all about the cost. So even if Matthew comes in and he reaches his hand in and he pulls out this can, if we're using FIFO, what number would we put to cost of goods sold? Yes, this is correct. The 2. That was the first one that went in. It's not about your physical goods. Nobody chose that on the polling question. It's about the cost of those goods. So which cost did you put in first? That is the first cost you should send out to cost of goods sold. What your ending inventory would say on this demonstration is that if you took the 2 out on your accounting records, it would say your ending inventory should still have $10 left in it, right? Because there was a $4 can and a $6 can. So then here's my next. Can you see this? In honor of Easter? What is this representing? Do you know? What was it?
LIFO?
That is correct. Okay, I don't think you can tell. Yeah, this is white. This is a white Pez. I put the white Pez in. I put the white Pez in. I put the yellow Pez in. I put the yellow Pez in. Oh, what's gonna come out first? Dang it. I think these things taste like medicine. I don't know why kids like them. Do you remember what I said? What's gonna come out first?
Yellow.
That's right. That's right. This little head popped open and a yellow Pez came out. So it doesn't matter if somebody doesn't like yellow and they reach in and they pull out the white one, because the white one was vanilla cupcake. That kind of sounds good. It's the yellow cost, the last cost that would go. Okay. And then weighted average. So here's my last little thing for you, number-wise. I'm going to share my screen with you, hopefully, and we will talk about these problems. So here's what I got. Hopefully, tell me, can you see an Excel spreadsheet now? Yes. So on your homework, you're going to have to do several of these. We're going to ask you to calculate cost of goods sold, ask you to calculate ending inventory, and it will ask you to calculate gross profit. So I'm going to do a short little example real quick. If we were using, I'm going to type it right down here, FIFO, and we sold, I'm going to use the same number of units, 100 units, 100, that's not good, units, for, let's say we sold them for $80 a piece. When you calculate cost of goods sold, if you're using FIFO, which units do I start with in my calculation? Any idea? There's your hint. I started to type it.
Inventory.
beginning inventory. I'm going to take these 59 units and I'm going to multiply them by 51, and I know it would equal that number because it's already in my chart, but I'm going to start my calculation for cost of goods sold with the beginning inventory. I'm going to start at the first of the column. And each of those, it says cost me $51. So I would really say my cost of goods sold is 59 times 51. But I'm not done with my calculation because I have to account for how many units that got sold. What I hear? 100? Yes?
Yeah.
Okay, so I'm gonna put 41 in this next box for my calculation because 59 plus 41 is 100, right? And where am I gonna get those 41 from?
The 7 purchase. April
Yep,
7th.
that first April 7th, that second line, she's right, this number of purchases, right? And each of those cost me $53. So what's gonna go here, 53, and in this box, it would say 41 times 53. And this answer, when I add these two up, is my cost of goods sold, okay? So here's a little shortcut then for your next answer. But I'm also gonna explain it to you. If they ask you to fill in ending inventory, if I know, remember that first slide that this all has to balance? If I know all of my inventory was worth $28,850 or $63, what should be left over is just that $28,860 minus the $5,182, right? So here's what your ending inventory should equal. Ending inventory should equal this number minus this cost of goods sold that we calculated. But another way you can check that is you could go through all of these units, and your homework is going to make you do this at some, or I know like on some of the problems. So it would say, I still have these units left, right? Copy those. And actually, I'm going to go down one here. And I have, how many of these 139 do I have left? You can do that in your head. Any ideas? Do we have any of those 139 left?
99, I think.
I'm gonna say 98. Am I right?
Maybe.
What I get? Did anybody second me on that one?
Yes, it would be 98.
Yeah, it's 98.
Yes, 98. I think Min said 98. So each of those were worth $53, right? So if I come over here and I say 98, we're gonna double check. Remember, I love to check myself before I wreck myself. So if I add up these three numbers here, it should match that number we had. Yep, it does. See how this number and this number match? Because all I did was show you the detail down here on the ending inventory that was left over. Oh, did I lose some of you on that? No? Okay. I see some no shaker heads. Oh, so I'm going to go on to the next one real quick. And if you need to leave at any time, since we're pushing the 40 minutes, it's okay. But the way LIFO would work is it would do the same. Actually, I got one more thing I want to tell you. When you calculate gross profit on your homework, you're going to need to calculate revenue, which in our example, it would equal 100 units times $80 each. Yes. Where did I get that revenue from? This line right here. The number of units I sold times the price I sold each of them for to my customers, right? If I want to calculate gross profit, I'm going to have to subtract the cost of goods sold from that revenue. So my gross profit should be $2,818 on this example. LIFO will look very similar to this, except it will start at the bottom. I'm not liking how I have this set up. So what I'm going to do is I'm going to copy this data and move it to another sheet so that you can still see it all. So on LIFO, it's going to be pretty easy because you'll see there's already 100 units within that last purchase, like on the very bottom of October 6th. So all we're going to have to do for LIFO, when we calculate the cost of goods sold, it would be, remember we said we sold 100 units. But they would be multiplied by this 57 down here at the bottom, right? That's how we work LIFO. We go from the bottom up. It's the last purchase. So my total for cost of goods sold on LIFO is 5,700. Ending inventory, remember how you can calculate that? Take what you had, the 28,863, and subtract the cost of goods sold. The other way you could do it is you would essentially add up all of these rows at the top, the 3,900, the 5,000. I'm going to copy that for you and show you how I can double check this 23,000. But I'm not going to use on this bottom row 119. It's actually going to say how many units there on the very bottom.
19.
Just 19? Because I sold 100 of those bottom ones? Oh, nuts, that's not what I meant to do. I'm gonna change this back right here. This is the box I wanna change. So if I wanna check my ending inventory amount, that we thought it was right there, that bold number. Oh, I need to undo that. There we go. It matches. Questions on that?
On sheet 1,
Yes.
where did you get that you multiplied or that you sold 100 units for $80 each?
Good question. That will be given in your problems. I just made that up because I know they're going to sell them for more than what they paid for them. I can see they paid 51, 53, 56, 57. So I just made up that quantity, but it will always be given on your homework. The number of units you actually sold and the price you sold them for. Good question. So on sheet 2, and the way it's going to work on your homework, a lot of the times, whenever you have to calculate gross profit again, but using LIFO, they will still say this same like piece of data. They'll still say like you sold 100 units for $80 a piece. So your revenue won't change, right? Like when I go to the next problem, remember these different costing systems, they don't affect revenue. So the revenue, if I were to calculate it again, I left the T off of there, or E off of there, would still be $8,000, right? Because it's 100 units, 100 times 80. My cost of goods sold this time, though, is a different amount. And so my gross profit will actually look different this time. It's revenue minus cost of goods sold. One more, or are your brains on overload? I got no feedback on that. How about weighted average? You ready? Do you remember what I said? There was a key to weighted average. I said something stupid, so maybe you'll remember it.
The total.
Yes. See? Stupidity works. I mean, not all the time, but a lot of times. So we care about the totals. Here's a total right there. $28,865. Total cost. Oops, I can't spell today. Total cost divided by total units. So what I'm going to do first is I'm going to take this total divided by this total. And it says each unit is costing me, on average, $54.87. Now in your homework, it's very picky about rounding. So if it says to round it 4 decimal places, I would actually want to leave off that last 2 on my homework, right? Now, if the 2 there were not a 2 at the end and it were an 8, I would need to round that 6 up to 7. Yes? Okay. So then when I calculate cost of goods sold this time, if we sold 100 units, all I got to do is take 100 and multiply it by that per unit figure, by $54.87. So my cost of goods sold is $5,487, right? Ending inventory is going to be either, and now this one, because due to rounding, it's not going to work out as perfectly. I'm going to show you why the 2 answers won't come out exactly right. But how many units do I actually have left over? Do you know? Anybody?
426.
Very good. That is right. She is correct. 426, because I did have 526, but we sold 100 of them. So this ending inventory would be 426 units multiplied by this cost per unit. Now, it doesn't balance to if we had taken that and subtracted off our total minus the cost of goods sold because of rounding. You can see how one is rounded off to a whole dollar, right? Right there. That's where I took the total and I subtracted cost of goods sold. But it's close. It's just the rounding that throws it off. So, any questions about weighted average? I will post a video where I walk you through another kind of Excel PowerPoint of these types of problems, and also a video of some of the journal entries that you will need to know and do from your homework. So, are you guys loving the quarantine?
No.
No one's loving it. Can you tell me one good thing about quarantine?
Sleeping in.
Yeah, I agree. Yes, I agree.
Every day is like Saturday.
I know it. Except for your stupid classes you got to do, right? Okay. Well, I'm glad to see your faces, and I probably won't do another Zoom session until next week, until we start a new chapter, because I'm finding that the videos, I can tell you everything I need to tell you and just post them and you can watch them whenever you want, right? It's not like you have to set a certain time. So I'll do some videos, but I probably won't do, unless you want to meet like one-on-one or something. So that's always available. Okay. No other questions?
Do we
Thanks
still
what was that one?
do we still have one session on 1 p.m. at 1 p.m.?
There is, but it will be the same thing. It's just because I have 3 Monday, Wednesday, Friday classes, and so it will look pretty much exactly like what we did today. So you don't have to go to it either. It was just an optional 2 different times in case the 10 a.m. worked for you
Okay.
guys. But if you want, you can show up again. Okay. I'll see you maybe next week. All right. See ya. Thanks for coming. Bye.
Bye.